Let's talk to Clem Chambers. He is the founder of ADVFN. Very good morning to you, young Clem.
Morning, Nick.
Right, Monday morning, what are you thinking? Obviously, lots of headlines over the weekend, whether it's Brexit, this Chinese situation, Bitcoin on a key support level, I'm told. What are you thinking today?
Well, I mean, Bitcoin has been quite strong. The cryptos have been quite strong the last few days. I think they've got a fairly large way to fall still. But, you know, with all this economic woes going on around us, I mean, it's going to support the cryptos because, you know, it's a way of protecting your assets. So I'm, you know, pretty bullish on cryptos over the next year or so. The UK market bounced. I mean, it was looking terrible on the charts yesterday, but it bounced. It still looks terrible, but it bounced. So, I mean, I'm a bear making money long, which is, you know, a bit weird. And, you know, one thing this market's taught us since 2008 is you've got to be long. And of course, that's going to be a fantastic strategy until it rips your head off. And so, you know, I'm kind of caught between that, Scylla and Currencies. It's a bear market. And if you've got cheap stocks, you can make money. But it's pretty wobbly going, I think. I mean, as you say, the trade war stuff, that's very interesting. But I think there's a lot of brinkmanship going on here. I think there's Brexit brinkmanship.
Yeah.
There's definitely that going on. I mean, there's Chinese brinkmanship. There's a lot of that going on. And, you know, we are, I think, in a revolutionary phase. And that is very challenging to know how that's going to pan out in the market. I mean, it will be good to be long the FTSE if there's a second referendum being announced. I mean, it would be very good to be long the FTSE if there's a snap election going to be announced. It will be very good for the FTSE if Brexit doesn't happen. And if it does, well, I mean, that should all be in the price by now, shouldn't it? So I don't know. I think it's if you read the media, it's very worrying times, but you can't trust the media anymore. It's just full of garbage. So, I mean, we're in a very interesting world, a world full of information and very few and very, you know, little good information. So you have to sit there with your fingers in your ear or wherever you want to put your fingers and hope for the best. And I think that's what a lot of people are doing. And effectively, that's what I'm doing. I think that we're in a sideways trend. I think we've got a lot of, you know, central bank support for anything that's asset based. And I think, you know, we're just going to have a bumpy ride sideways. And, you know, if you buy cheap stocks and the market crashes, you'll be protected by them being cheap. And, you know, if you buy at the bottom of any correction, you know, you make good money when it reverts, et cetera, et cetera, et cetera. So I think it's a very delicate game that we're all playing at the moment.
Well, I've got to say, one thing that caught my attention last week was reading that the breadth indicators in the US stock markets was saying that basically, although we've hit some record highs again, okay, the breadth is diminishing. So, you know, we've only got a few stocks basically dragging us forward. Now, the textbooks always said to me that that's quite a dangerous position to be in.
Well, all the actions in the American market, I mean, I'm kind of ticking over in the UK market. It's the American market where I'm making a lot of my money. And, you know, you look at those valuations and you've got to ask yourself, what is that?
Yeah.
I mean, you know, it's a different world. Now, the trouble is, if you're a kind of, you know, little Englander, like I used to be, and a lot of people still are, you go, well, it shouldn't be allowed, you know, ridiculous valuations, blah, 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 blah. But really, back in the old world, back in the, you know, 20th century, I mean, maybe our prices are all wrong here. And I think they probably are all wrong here, because if you look at assets and you look at liquidity and you look at the world that we live in, it's very different from the world we lived in 20 years ago. So maybe the American prices are right. And I think somewhere between where the UK prices are, which is absolutely on its back. I mean, the UK market hasn't really moved in a generation. And you look at the American market, which has moved pretty strongly over the last 10, 15, 20 years, which is right. And, you know, you can always argue with the successful large country with huge wealth and say they've got it wrong and say we've got it right. But I think there's a lot of truth in the US market and the US market valuations, at least in the current environment. And I think, therefore, it's not necessarily so bad to be long a really poor dead market that's about to go through great trauma, i.e. the UK market. Because, you know, if we do, well, we will have a Brexit by the looks of it. I mean, it's not guaranteed. It will force us to completely change our model. And it will be revolutionary. It will change everything in the UK. It will turn it absolutely upside down. And that upside down, that revolutionary change could be absolutely massively fantastic for the FTSE. Because if you look at the FTSE and you look at the UK, it mirrors France. And we all, nobody in the UK would say, oh, France, well, there's a great economic example we should follow. But if you look at the FTSE and the CAC, it might as well be the same market. So, I think it's a very interesting decade ahead of us. And if we do get this Brexit, this hard Brexit, we might end up more like America. Then we might end up like France. And that would be a potential, well, for me anyway, for the markets, I think that'd be a very good thing.
Right, Clem, we've run out of time. Thought-provoking as always. That's Clem Chambers, the founder of ADVFN. Thanks, Clem.
Thanks, Nick.